Hello and welcome. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. These are the top headlines we are tracking at the hour. The Nifty recovers almost 60 points from the day's low. The metals index gains for the first time after 5 days. The currency, however, falls to a 6-month low on debt outflows and dollar buying by Indian banks. Avenue Supermart surges as much as 17% after a Goldman Sachs report projects a 53% upside for the stock. And Hindustan Unilever is one of the top losers on Nifty today after it says that rural demand is still sluggish and it's going to be a very slow road to recovery.
Well, but it's not a slow road to recovery for the index actually, or maybe you can classify it as a slow road to recovery today because we are in the green, which is a really good thing. After Thursdays and Mondays carnage, we have a bit of green on the screen, which is very, very welcome. So 9885 for the Nifty. Pull up the Bank Nifty as well and just show you what's happening to those indices. The broader market's about 1% and a quarter higher, so the market breadth is pretty positive today. And let's get the heat map and then let's get the contributors up on the screen. This is, well, it's a really good thing. We may be showing BPCL as the top loser, but look at what's happened to stocks like ONGC. Look at what's happened to metal names. Vedanta as well as Tata Steel are in the green. There's a lot of traction being seen in select pharma names like Lupin, Aurobindo and Sun Pharma. So the pharma stocks too are moving up in the session today. So a bunch of pockets out there which are doing well. One couple of losers, if you will. One of them is, of course, Hindustan Unilever, after it pointed out that their road to recovery in the rural space is not as what was earlier envisaged, so fairly slow compared to what the anticipation was, and HUL is down. And Asian Paints is down about 1.5%. Quickly just get the contributors up on the screen and show you what is contributing to the fall and what is contributing to the rise, more importantly. ONGC, ICICI Bank and Vedanta amongst the key contributors. The HDFC twins continue to lag.
Well, if you look at it, Niraj, honestly, it was the mid-cap and small-cap that led the way up. In fact, mid-cap and small-cap indices have been trading in the green for a few hours now. And the very same stocks that were beaten down, the favorite stocks that saw huge selling pressure like, NBFCs, Diwan Housing is on your screen right now. And say some real estate stocks like India Bulls Real. Now, these are the stocks where buying has also emerged because these are the ones where there has been significant correction. You also have IB Venture from the same group, which is up by around 12% today. Also look at Graphite India. Metal index has been into positive after a long time, and you can see the mid-cap metal stocks like Graphite moving up with good volume. You also had Future Consumers moving up. There is a lot of buzz in retail sector, and Future Consumer has definitely benefited. On the flip side, you have aviation stocks with crude inching towards $60. So bad news for aviation stocks. So Spice and Jet, both the aviation stocks are down. Spice has lost 4% so far in a trade on a day when in fact the mid cap and small caps are doing quite well, Niraj.
Well, market regulator SEBI, I'm sure Pradeep has more questions, but market regulator SEBI has allowed the entry of mutual funds to trade in the commodity markets. The plan is currently in the nascent stage. Joining us to discuss this is Mrugank Paranjpe, Managing Director and CEO of MCX, who we believe could be a principal beneficiary as well. Good having you, Mr. Paranjpe. Thanks for joining in. How big a spurt, if at all, could this really cause, as and when it gets clear, of course, but what's the what the eventual outcome on volumes could such a move have?
So I think this is a very welcome move, but to the question on what this really means is, for any market volumes, you need a lot of products, and in that sense, we've seen options being approved by SEBI, and we are hoping for indices to be approved, and we have just launched our new indices with Thomson Reuters as a partner. The second is for distribution to really expand, and there again we had a very big positive yesterday when RBI allowed bank-owned distributors to become a part of the commodity derivatives business. And the third is in terms of institutional participation. So there are various segments of the institutional participation. Alternative investment funds have already been allowed. And as we all heard at today's conference, SEBI is absolutely keen to look at how mutual funds and PMS providers can also be allowed. The depth that it brings to the market has two implications. First, it gets long-term money to the market. Again, as all of us have seen our experience in the equity markets, the sort of money that comes through the SIPs into the equity markets today. It is really the retail long-term money, which is the big beneficiary for the market as a whole, that comes in through the participation of people like mutual funds. The second big benefit we see for commodities exchange is that today there is a certain lack of depth in the long-term contracts that are offered on the exchanges. So while you have great liquidity in the up to 4 to 6 months of contracts, anything beyond 6 months does not have that much liquidity. And again, the annual of institutional investors will mean more demand in the longer term, and we believe that will automatically create a good liquidity in the long-term contracts, which will allow the corporate hedgers who otherwise go outside of India and hedge on international exchanges to come back and hedge on the Indian exchanges.
Ranjit, like you mentioned, the alternate investment funds are already allowed. How much interest have you really seen so far?
So within the first 1 month itself, the first alternative investment fund has already started trading. A couple of weeks back, we actually had a sort of masterclass for people who wanted to create AIFs. Our understanding is that within this fiscal, we will see probably hit a double digit in terms of the number of AIFs that start trading on MCX.
So like you mentioned, the availability of longer term contract would be a prerequisite for mutual funds to start offering that kind of products?
No, it's not a prerequisite at all. Mutual funds and institutional investors are very much participants and do trade in the shorter end of the contracts as well. What I was saying was that because they have longer term money, they will create a demand in that segment, and that demand will then create the liquidity that we are currently lacking. So from the market development perspective, the presence of institutional investors will help the building up of the far end of the contracts.
So one last question, if you have spoken to some of the AMCs, I believe you have been working with some of them, and discussions have been going on. Do you really see a lot of interest in this, and also what kind of other requirements that AMCs could put forth before they start launching their products?
So two things. One, in today's FICCI seminar, there were 2 sessions where we have people from this industry, and they are absolutely packed in terms of the audience. Gives us some indication of the interest that is there. Second, AMFI, which is the industry body, has already submitted a white paper to SEBI, A, giving what they think will be the likely products, B, also detailing out what they need in the regulations. And in terms of some of the ideas, I think, for example, today we have gold ETFs which invest in physical gold. If they're allowed to actually invest in gold futures, not only can they mimic the returns of a gold fund, they can actually do it at a lesser cost and in fact get a better yield by utilizing their idle cash. More importantly, it will release the idle gold that is stocked in the vaults today. So it's one of those clear win-win situations, and I think there are more such ideas which the mutual fund industry is absolutely happy to look at.
Well, okay. Mr. Paranjpe, one quick question. Your August and July volumes, the average daily value traded went up. Is there an estimate as to what it could go up to in, say, end 2019 if all of these products do become a reality? They seem to be certainly on that route.
Sure. So I think we generally do not give any estimates or outlooks. But yes, we have been consistent to say that if anybody is looking at a long-term 3 to 5 year horizon, then in the 3 to 5 year horizon, with all the developments that are happening, and as long as they continue to kick in at the pace that we are looking at, a 15% growth on volumes is something that is sustainable in the long run.
All right, Mr. Paranjpe, before I let you go, just a very quick question. There is a lot of ambiguity with regard to mutual funds, putting their money in the commodities market. Like in equities, we've seen in the futures and options space, they can only hedge, which means they can buy options and not write options. Would we see any sort of that restriction in the commodities market as well?
Too early to say. I think the AMFI white paper is with SEBI. Like has happened in the past, SEBI will start the consultative process. So we should see some contours of what is the likely regulations in the next couple of months. But I think at this point of time, too early to comment on that.
All right. Thanks very much for joining us today and giving us the outlook, how it will pan out for MCX once the mutual funds will be allowed to invest in the commodities side. But joining us on the show right now is Sanjeev Bhasin and Hadrian Mendoka of IAFL, and also joining us is Mukesh Singh, on the technical front. Well, good afternoon, gentlemen. Thanks very much for joining us. Sanjeev, coming to you first. We've seen a good recovery coming in the markets today. Do you think the template remains the same once again, buy on dips?
Well, no, we've had a sell-on rallies for the last few weeks, and above 10,100 we thought again there was a lot of froth in Nifty, and the Bank Nifty anyway was a weak link because it didn't make a new high. So we've consistently been asking clients to sell on rallies, and that has played out well. Last week when I was there on your show, I told you 9,800 is within the realm of reach. We think there is an oversold market in the last 2-3 days, and you could see a pullback up to 99.50, but we still hold Q that 9700 may be there on the next week, and in October we think that you could go deeper below that and test the June lows of 94.40 before the end of October.
Yeah, PH Ravi
And
Kumar.
I'm presuming that you would be advising your clients to do that as well. Just before we get in our technical experts in, Sanjeev, from a short-term tactical perspective, do you reckon it might be prudent to stay short on the markets? Initiate fresh shorts as well?
Well, we had short positions in the last 3 days, and our clients, most of them have made a huge amount of money on the options and on the spreads which we gave on the bear put side. Today morning we actually thought the market was oversold, and we are now preparing for a pullback up to 99.30 to 99.50, and so the trading side says that you should use these dips to buy stocks like ONGC, Lupin, Sun Pharma have been some places where we've been long, and some of the oil marketing companies where we are advising to short as a hedge against the market volatility.
Okay, so stay on, Sanjeev. So much more to talk about. Let's talk about some specific stocks as well. And Hadrian as well as Mukesh with us. Hadrian, to you first. Your stock-specific recommendations for this afternoon.
Coming to stock specific, Bharat Forge is something that is doing pretty interesting on the charts. Actually, if you see the past 5 days, markets have fallen. Nifty specifically has fallen more than 350 points. But if you see, Bharat Forge has been resilient in the in the fall that has been happening with the stock. So I think it is better to stick to such strong trending stocks and try and use such dips wherein stocks like Bharat Forge turn out to be outperformers. So I think from here on, it's a good level where you can actually accumulate these counters, and then from here on, we could see another 4 to 5% if you're a short-term trader.
Mukesh, what about your trading strategies at this hour?
Actually, I am also focusing on Bharat Forge. It's a buy around current prices, 1262. Stop would be somewhere around 1224, and on the upside, I am looking for a push towards 1325, 1350 in coming days. And the target over here is much larger as based on as evidenced by the larger rounding bottom pattern. So I think this one particular stock should hold the buyers in good state. And the other stock which I am looking for is again from the auto ancillary space, that is Motherson Sumi. Much like ditto like Bharat Forge, it has also not lost too much ground in the mayhem of last 3-4 days. On the contrary, it kept on consolidating around the highs of 345, 350. And now with today's push, it seems that this particular space is ready to take on the leadership for next couple of days if the market moves higher. So the second stock would be Motherson Sumi at 340 buy, and the stock would be somewhere around 335, 336. And on the upside, I am expecting a push towards 360.
Okay, stay on, gentlemen. So much more to talk about. But I want to come to the stock of the day. Now, yes, we can argue there are probably two stocks which qualify for this. ONGC from the large cap space, and well, Avenue Supermarts is a large cap as well. Even that could qualify as one, but I've chosen ONGC for a reason. It's after a while that we're seeing such continued traction on ONGC, but more importantly, and I want Sanjeev Bhasin's view on this. On December 31st, 2016, Sumit Sarkar has dug out this data. There were about 13% sell calls and 46% buy calls on ONGC. Sanjeev, as we look at it today on the terminal, 70% of the analysts, sell side, have a buy rating, 30% have a hold rating. This is as of December 31st. Now bring in the picture today. September 26th, there is not a single sell call on ONGC. Crude is inched up, that is leading to this bit of an uptick as well. Is there fundamental merit, Sanjeev, in looking at ONGC?
Well, yes, you know, at 160 it was a scream, and now at 170 it only becomes again a buy on decline. But you cannot miss out on ONGC on the back that Brent crude has touched, I think, almost a 2-year high. So I think their margins are going to expand, and with no subsidy now and the burden being very, very low, I think ONGC becomes a very good play on the oil exploration side, along with one of the discoveries which they did. So I think this merger of ONGC, HPCL's rally may have played out for the best, and we think ONGC has a leg up. So I think by the end of the year you could actually see targets closer to 200 on ONGC.
All right, 200 could be the target on ONGC in the coming days. And Sanjeev, the oil marketing companies which are weak today, what's the call there?
Well, they will continue to be weak or sell on rallies. Like we said, the best of the rally is over. Any rise in crude would be negative only on perception, because I know there is free pricing on a daily basis. But you know, this government is now definitely going to be falling back on some populist measures, and I don't rule out some sort of excise duty cut if oil remains at these you know, boiling levels. So for us, there will be some weakness into the OMCs as margins may not expand to what the present prices are.
Sanjeev, just one word before we get to the next management in. The commentary from HUL, which has led to this drop in the stock, and they're clearly questioning, or at least commenting on the uptick that everybody envisaged could happen in the rural demand. HUL is saying that they are unlikely to see a pickup anytime soon. Does that percolate into the rest of the space as well? And is that a negative for the near term?
Well, surely, you know, HUL has been one of the big legs which has led this Nifty to 10,000 or rallying all the way from 950. And at 52, 53 times, there was hardly any justification except that HUL after 3-4 years has broken out technically and fundamentally. And now I think the best of the margin picture is behind us. GST has been a dampener. And like you said, the opinion is that consumption demand, which everyone is expecting a big leg up due to the festival season, may already have played out. So I don't see margins expanding. In fact, margins could contract, and I think the relative pressure of Patanjali may exist for some time more. So HUL continues to be one of the most expensive stocks on the FMCG basket, and you know, it's been one of the legs, like I said, of the Nifty rally. So that, along with Reliance, needs some sort of consolidation, and you could see profit booking on rallies in HUL.
Okay. Sanjeev, maybe you want to listen into this next conversation. A very interesting management and somebody with a sense of what's happening across the rural landscape. Sumit Malhotra, Managing Director at Bajaj Corp, joins us right now on the show. Yes, the products are chalk and cheese. Yes, they may actually have a completely different view compared to what HUL has said, but it'll be nice to get their opinion. Mr. Malhotra, thanks so much for joining in. What is your sense of what's happening in the rural landscape? Is the recovery wobbly at best and slightly difficult to call at worst?
I don't think on the ground there's much of recovery that is visible. Yes, there's a lot of hope, and I think most of the positive sentiments that companies sort of talk about is more hope rather than reality. And I've always been saying that only a good monsoon doesn't get recovery. So you've had a decent monsoon second year in a row, but on the ground, in terms of consumption or disposable income, there's really not much of a change.
So the long-standing belief was that, one, yes, the monsoon, but two, a lot of other measures that were taken, putting money directly in the hands of the rural population, farmers, so on and so forth, would have led to at least the consumption space and FMCG space seeing those volume upticks coming in. You clearly saying that it is difficult to call at this point of time. When will that happen in the first place?
See, I firmly believe that any sort of change in disposable income or consumption in the rural area comes only after a good harvest. And the harvest is still some time away. The second thing that you need to keep in mind is that most of the rural economy is debt-driven. And even if you have a good monsoon and let's say the MSPs are good enough, the first thing that gets affected and the money moves towards is repayment of debt. And therefore, real consumption and consumption of sort of consumer staples is quite, I would say, a minimum 3-4 months away.
Mr. Malhotra, last 2 quarters for the entire FMCG space has not been great. First, it was because of demonetization, and second, it was due to the rollout of the unified tax regime in the form of goods and services tax. Tell us, how is the current quarter different? Can we expect a better growth? Because the volume growth in the last quarter for you was a little bit tepid.
I think uniformly across FMCG, the second quarter would be better than the first quarter of this financial year. And that's not only because of restocking that is happening post-rollout of GST, but also I think the infrastructure that is the route to the market for most of our products is now becoming a little clearer. What I mean to say is the wholesale demand, which had really fallen in the months of June, and a part of July, is coming back, and therefore you will see some growth in the second quarter. But I don't think it will be as good as it was maybe a year or so ago.
All right, Mr. Malhotra, we appreciate you joining us today and giving us that outlook on what kind of financials or other earnings can be expected. Still, second quarter could be slightly better than the first quarter, but clearly, Niraj, it looks like, the earnings trajectory still for the FMCG space on the upside may take little more time because of GST.
Well, he's saying 3-4 months away, which means quarter 4. Maybe quarter 3 could not be seeing a bit of a bump up as well. Just that quarter 2 would be better than quarter 1. Sanjeev, understand we have to let you go, but before we do that, just a word. I know you spoke about HUL, but you just heard the Bajaj Corp management as well. And seems like the real recovery, whatever the number is probably at least 1 quarter away, if not more.
Correct, and he specified the point of hope and hype, and that's what the market is. More of hype and more of hope and less of hype. So just be watchful, because valuations are not in your favor, and even though there is a wall of liquidity, justification of earnings and macros does not relent to trade at the valuation they are trading. As a contrary bet, we've been bullish on some of the beverage names, and we continue to think on decline. Nestle and Tata Global are 2 stocks which you must have, and they should see much better performance than the rest of the FMCG basket. ITC at 262, 265 offers a very good risk-reward ratio of a 10% upside, inclusive of all the other businesses like paper, hotels, cigarette and FMCG put together.
Were you bullish on DMart ever, Sanjeev? I know Agam has got a really interesting piece on DMart, but were you ever bullish on DMart, Sanjeev?
No, for me it's an avoid, because I think I was bullish on Future Lifestyle before DMart came at 125. The stock has touched a high of 400. For us, this is a total bubble which should be avoided, unfortunately.
Fair call. We'll leave it at that, Sanjeev. Thanks much for taking the time out and joining us and giving us that perspective. Okay, let's go to Agam first and then go to Hadrian on the charts. But first, Agam, while HUL may be one of the top losers, both of them within your coverage universe, Avenue Supermarts, now up 10%, was up 17%. What's the rationale that Goldman Sachs is throwing? And is there a sense on valuations vis-a-vis some of the other peers?
About the sense and valuations, Niraj, we can definitely talk about it. Let me just start off with what DMart has done. We have seen the stock move up by as much as nearly 17% today. It's come off from day's highs. Now it's up nearly 9%. What has it done in the time since its listing? Well, it has certainly doubled from its listing price, and it's moved up as much as nearly 4 times when it comes to its issue price of nearly 300 rupees per share. But, coming down to Goldman Sachs report specifically, they did initiate a buy, and they have put in a price target of nearly 1600 rupees per share, 1586 to be precise. Now, Goldman Sachs does suggest that the market shift towards the organized sector after we have seen in the implementation of GST is something that will aid Avenue Supermarts. And, they are looking at a high growth, low margin, high return strategy, and that's something that could also, push Avenue Supermarkets to substantial highs. But I'm looking at valuations, and this is perhaps the first time in my career I have seen a report throw up a price to earnings ratio of well over 10 years in advance. So Goldman Sachs has put a price to earnings ratio for FY29 at 28 times. Which is a little bit of a surprise, I suppose, to everyone. But even if you consider the price to earnings ratio of FY20, that still stands at 46 times. After today's move, it will move up to as much as 49 times. So there is no doubt of the fact that it is certainly a very expensive stocks. But at this point in time, do valuations matter? Well, we don't really know. Even in terms of the Bloomberg consensus, when you consider the number of buys, the sells, and the holds, well, we do have about 44% sell, and that means that majority of these analysts on the Bloomberg consensus do have a sell with a price target of 958, which is a lot below its current market levels. So the question remains is whether or not the levels at which it is trading at is of a fair value, and if it is not, then where can we see the stock moving in?
Well, Agam, not only in your career, I'm sure in everyone's career, we've never seen a brokerage report which gives a price to earnings estimate of FY29 as of today. So that's 10 years from now. But Niraj, if I look at, I'm just checking the EPS estimates given by various brokerages on Bloomberg. FY17 EPS of DMart was 8.5 rupees, and the projected growth for FY18 is 12 rupees, which is a 42% upside. And for FY19, it's about 36% upside, which could be anywhere in the range of 16 to 17 rupees. This is a company in the retail space which operates with that margin of almost 8%. We know the margins are very, very thin in this sector. And if you look at Walmart, if I'm not mistaken, when DMart was about to list, there were reports that Walmart's operating margins are about in the range of 5 to 6%. By no means I'm comparing DMart to Walmart. That's a huge giant in the retail sector. But if you look at the growth, the estimates are actually very, very encouraging, and we've seen a good performance. And the other reason why the stock has been going up, I think the free float is the other factor in this stock.
That's the key thing. Yeah, there's just hardly any free float. Plus the pedigree of the management also comes in out there. No mean man manning the company, but you would at some point of time start questioning the kind of run up that the stock has seen. I don't know. Can you look at the charts of Adrian? Can you look at the charts of Avenue Supermarts and figure out if indeed there is any kind of a call that somebody can give on Avenue Supermarts from a trading perspective?
See, as far as trading is concerned, I think the move that has come in one single day is like too much to handle for something like a stock that is recently listed. So if you see, since inception, the stock has been trading in a pretty clean channel, rising bottom and rising tops. Today, for the first time on a weekly basis, prices have broken past that channel, and this means prices are telling us that it's going to move even higher. Obviously, we're going to see a lot of consolidation in the coming weeks for DMart, but I think from here on, after consolidation of a week or two, we're going to see another move that's coming on the upside, and I think somewhere close to 1265, 1275 cannot be ruled out post the consolidation.
You'd advise a trader to stay put?
Definitely would advise.
But not initiate a fresh long?
Initiate a fresh long once we have a fresh breakout, that is post the consolidation. So we'll have to wait how things pan out in the next week or so, and then we can take a call on whether we can initiate a fresh call or not.
Okay, I'm sure we'll have multiple conversations over the course of the next few weeks, Adrian. It'll be interesting to see what happens there. But this is an interesting thought out here on Avenue Supermarts. It's really the key mover in the session today. And yeah, the most since listing, the 17% jump was the biggest jump since listing. And this story is available on BloombergQuint.com. So log on to the channel and log on to the website, and you will get multiple perspectives on Avenue Supermarts, including a gist of the brokerage note that has come out today by Goldman Sachs. On Goldman Sachs' conviction list is Avenue Supermarts. What else? There's some bit of a correction that we're seeing in a bunch of these oil marketing companies in the session today. I remember we spoke about ONGC, but what about the OMCs? Mukesh, what would you do here? BP, HP, IOC, and the fall that we've seen today, is there a trade on the downside for any of these?
BPCL is, in the morning, it has tested that 200 days exponential moving average at around 460. And I think it's getting into a sweet spot area where medium-term to long-term players can once again start building up long positions with a strict stop placed below 440. that can be done around 460-65. So contrary to majority of the opinion, I am having an opinion that BPCL still the longer term uptrend is still very much in force, and I will be a buyer around 460-65 with a stop place below 440.
Okay, just a couple of things. We just want to thank a few of the viewers who are logged in right now in questioning. So I think Mr. Pangarkar was asking about what about DMart Goldman Sachs 2028 valuation. I think we answered your question, Mr. Pangarkar, there. But a couple of other things, and we'll talk about these during the course of the next half an hour as well. I think Asad Hamid Khan is asking about whether there is a good power stock. It's a good question. Sharmila Joshi will be joining in moments from now. We'll talk to her about that. And Brian Mahendranathan is speaking about, or giving a comment really about how he believes that the markets could go up. So a couple of things, or 3 or 4 names that we've gotten about questions for, and we'll try and answer some of these during the course of the show. But right now what we'll do is tell our viewers about the Fab Four of the day. Yes, you could argue that ONGC and to an extent Avenue Supermarts could well qualify to be the Fab Four stocks, but those are known. What Yash does every single day is pick out some of the relatively unknown names and gives us reasons or the trading patterns for the same. Yash, good afternoon. What's on your Fab 4 list today?
Good afternoon, Niraj. So, oil exploration companies were in focus today, with Aban Offshore gaining more than 10% intraday, with crude oil prices surging more than 3.5% on Monday, and Brent hitting multiple year highs. We have Himadri Chemicals gaining in trade today after brokerage firm Antique initiated coverage on the stock with a buy rating and a target price of 222, indicating an upside potential of 64% from Monday's close. Shares of Indiabulls Real Estate showed strength in today's day of trade. The stock snapped its 4-day losing streak, wherein it had given up on gains of nearly 21%. As you can see, the stock is up about 4.5–5%. Lastly, buzzing on the back of Prime Minister Modi's announcement of Power for All scheme, we have Adani Transmission gaining in trade today. The stock is up about 4–4.5%, which also snapped its 7-day losing streak.
Well, thanks a lot for that, Yash. Well, at least we have one power name which is actually reacting, because otherwise the power names haven't really taken to fire after what's happened in the scheme yesterday. But Adani Transmission, interestingly, doing as well. REC is not. I just want to pull up KEI Industries, because that was the other expected stock that could have done well. The management didn't have an exact clue of when the orders will start coming in, but I was hopeful that there will be some order inflow that could come in. But no, not so much. So Adani Transmission kind of remains the lone ranger in terms of stocks that are moving up based on what the PM's scheme was, or is rather.
Well, outside the power space, there are a lot of stocks needed which are buzzing. Let's just pull up quickly Godfrey Philippe. The counter is trading at day's high currently. We've seen good gains coming about. In fact, that's your top gainer in terms of F&O securities as well. So Godfrey Philippe up about 8.5%, trading almost at day's high. Mukesh, on the charts, would you recommend taking any fresh longs here?
Godfrey, I'm afraid it behaves more like a sine curve on the charts. I mean, there are some violent ups and downs, and I mean, if at all, if someone has bought, then one can expect a push towards 1120, 1125, but no fresh positions.
Okay, no fresh positions there, but let's also bring in our next guest on the show, Sharmila Joshi, who is an independent market analyst, joins us now. Hi Sharmila, once again we've seen a good recovery coming in the markets, and I just want to start first with the realty space. Last 2 days the realty index was hammered and how, and today there's been a huge recovery coming about. Is there any stock in the space that you like?
Possibly Godrej Properties. I think overall real estate as a sector is not something that I've ever recommended. I've always preferred the proxy play to direct real estate stocks. So I've always recommended the paint companies or a Century Ply or stocks like that. But I think housing finance companies, which have also of course all been doing well in this huge mid-cap rally that we've seen. But I think within the pure play real estate companies, I think Godrej Properties is about the only stock that I've recommended, and that too is seeing a good upside today. But as I said, I mean, not really because it's gone up, but that's really the only stock that I like.
Well, not surprised. Actually, multiple people like only one stock in the real estate space, and that's Godrej Properties. To an extent, maybe Prestige or Oberoi make the cut as well. But Godrej largely remains the favorite in today's session, up about 4%. That's a good spot. The other one, and the other space that has done very well today are the pharma counters. Now, Hadrian, just before we get in a really big interaction going, anything on the charts in the pharma space? Because today large cap pharma is making a bit of a comeback.
Yeah, definitely. Dr. Reddy is something that is doing pretty interesting. Apart from Dr. Reddy, even Lupin is something has held out pretty well in the past 2 days. If you see, good thing about Lupin is it is holding above its the 21-day moving average. That is acted pretty good support for the past 3 weeks for now. The only hurdle here is the 50-day moving average that is close to the 1025 mark. Once we see Lupin crossing past the 1025 zone, I think this should be a stock for the medium term, when we could see Lupin heading clearly towards the 1080 to 1100 mark. So, anyways, pharma has been a huge underperformer in the time where markets have done pretty well. I think it's time to continue to hold stocks like Lupin and get the benefit out of these stocks.
Well, okay. Speaking of Lupin, then. Let's first hear out the management. Remember, pharma companies that are already plagued with pricing pressures in the US are now faced with a new pressure point, and that is what's happening in the domestic business. So most drug makers witnessed a slowdown in the Indian formulations in the first quarter, and the reason? Destocking ahead of GST. Darshan sat down with Rajiv Sibal, the head of India region formulations at Lupin. He is confident of growth catching up over the next few quarters. Listen into a slice of this conversation.
As far as domestic market of Lupin is concerned, obviously the first quarter was impacted because of the GST.
Yes.
We started the quarter with a very, very robust growth as far as April is concerned. Even to great extent, May was also good. But I think June saw the biggest impact of GST, because of which quarter was, impacted. But if you look at the results of most of the domestic results of, different organizations, I think we have been one of the best performers as far as Lupin is concerned in the first quarter.
Okay.
Because we have been impacted by 5% as far as our growth is concerned over the last year. Obviously, it is only because of June, and we are very sure that July, August have been very good months. We are very sure that whatever we have been impacted in the first quarter, going further, as far as next quarters are concerned, we will be able to cover up to a great extent.
But you've guided for 14 to 15% revenue growth, for the balance for FY18. Now, the first quarter wasn't the best. So how do you think this number will come in? What are you doing and how are you so confident that this number will come in?
So Darshan, if you look at the Lupin performance, domestic business over the last few years, if you look at last 4 years, the market has grown at a CAGR of 12% and Lupin has grown at 15%. So that's how we have talked about 15%. Yes, the first quarter has been exceptional, a different quarter because of the GST impact. But I'm sure coming quarters, once the destocking, whatever happened in the month of June, obviously, the stock levels will go up. And we are seeing that particular uptrend in July, August. And obviously, in this particular quarter onwards, this quarter onwards, we will be on track as far as 15% growth is concerned. And one of the reason why I am so confident as far as next 3 quarters are concerned, because the portfolio, what Lupin as far as domestic business is having.
Okay.
If you look at the market has acute portfolio contribution of 65%, chronic portfolio contribution of 35%. But as far as Lupin is concerned, we have more, contribution coming from chronic segment, which is to the tune of 54% versus market of 35%. And the chronic business, particularly lifestyle diseases, these are the drivers of the business, and that's where we expect that we will be in much better shape as far as next 3 quarters are concerned. Plus, we have also got a lot of alliances, with the other organization in diabetes segment, and that is one segment, which is doing very well as far as market is concerned. And we have launched certain new products that will also add to our growth as far as diabetes segment is concerned.
Well, that's the Lupin top management in conversation with BloombergQuint on the India business in particular, and that stock has done rather well for itself. Sharmila, to your clients, are you recommending any pharma names?
Well, I have recommended Lupin and Sun Pharma, and the strategy obviously has been to buy on dips, because I think the larger sense that I'm getting is that while the troubles are not over in terms of stock price, possibly everything is factored in, and we are seeing a sort of a bottoming out process. And in the interim, we've had such a huge run on some of the other stocks way ahead of valuations that that way you get a little comfort in pharma, that if valuations were to turn a little better, you could possibly see a good recovery in stock prices as well. So I think this and a couple of other stocks are stocks that I've really recommended clients. And the strategy, as I said, has been, for instance, in Sun Pharma has been to say try and buy around 500 levels. So every time you see this kind of a correction in the market, use it as an opportunity to add these names.
Okay, that's the view on the pharma space where we've seen some sort of buying coming back, at least in last week's trading session. And now also there are some select pharma counters which are witnessing that sort of interest. But remains to be seen whether the earnings, the pricing pressure, which everyone's been talking about, comes back on track or not. But moving on, let's talk about the other counter which is in focus, and that's Century Plyboards, precisely on back of after IIFL has turned bullish on the stock. The brokerage house expects stellar earnings growth for the company and also recommends a buy rating with the target price of almost 330 rupees per share. Well, joining us on the show is Sajan Bijanka, who is a chairman at the company. Mr. Bijanka, good afternoon to you, and thanks very much for joining us today on BloombergQuint. Well, IIFL has turned positive, and in their report, they've mentioned they expect a revenue CAGR of 20%, EBITDA 18, net profit about 15, and I'm talking about the period from FY 17 to 19. Do you think you'll be able to meet the kind of numbers which IIFL has highlighted in its report?
Yeah, particularly our new additions, all are high EBITDA items, like in MDF, so EBITDA would be very high, because almost the direct expenses are to the 50% only. And similarly, the particle board is also a high EBITDA item. Maybe on the profit after tax, at that level, maybe we may have to struggle a bit, but at the EBITDA level, we shall be very comfortable in future.
MDF segment is the other space where a lot of analysts have been talking about. Tell us, when is the commercial commencement of your MDF unit, and what kind of revenue contribution are you looking at from that unit?
We are likely to announce commercial production from the 1st of October.
Okay. And what kind of...
We have almost...
No, I think we've slightly patchy line there. But Mr. Bijanka, 1st of October, I heard you say that. What kind of revenue contribution would this unit make?
For the first year, it may be around 160-70 crores for the next 2 quarters. And later on, it would be the basic for MDF would be 400 crores plus. And then we are planning many value additions. With those value additions, it will increase further.
Okay, fair call, Mr. Bijanka. We wish you all the best for all of this and more. And thank you so much for taking the time out and speaking with us today at BloombergQuint. By the way, while this may be about a stock that has gone up about 2.5%, look at the moves in certain NBFCs today. We spoke to Diwan Housing in the morning about the push on affordable housing. That stock is up about 6.5%, and I think at 557 trading in the day's high, arguably life high, so good move for Diwan Housing. Edelweiss Financial Services is up 10% at 279 or 280, and boy, has this been a mover, a big one at that. You know, I think Edelweiss, Motilal Oswal, and IIFL started the move at virtually the same time, and post that, Motilal has probably been a bit stagnant in the last 3 or 4 odd months. IIFL has been ho-hum. I think that one stock that has really set the stage on fire is Edelweiss. The last 3-month chart, if you pull up, you will see what I'm talking about. It's not just the 10% move today. I think in the last 3 months or the last 6 months, Edelweiss has just had a fabulous move. 46% in the last 3 months, 100% in the last 6 months. It's been a big mover. What differentiates these three? And there is an MK Financial Services as well, Sharmila. Have you looked at the numbers there?
Oh, well, honestly, no, but I think that possibly Edelweiss was playing some kind of a catch-up, because I think Motilal was always sort of little ahead in terms of valuation. And I think what one must remember is that at the end of the day, you know better than me that none of these are really pure play, broking plays anymore, but they're more like, sum of parts, because all of them have a lending book, and they're almost like mini financial institutions, and they're growing. So possibly Edelweiss also gets that advantage, because it is also growing from a smaller base, so as compared to say a Motilal or some of the larger names. So, possibly it's also growing faster. But that said, I think I would continue to remain positive on all three.
Well, actually, I stand corrected. Maybe Sharmila was right. This year, if you look at all the 3 charts, they virtually have had now an identical move. Just that the last 3 months, Edelweiss has come out and really captured the setting stage here. Is there a trade hadron in any of these three names? Okay, I know you can't comment on IIFL. What about Edelweiss? Can you comment on Edelweiss? It's a competitor, Adrian.
I think I'll stick to the other NBFCs like DHFL, wherein we see a lot more momentum going on. As you said, the stock has performed pretty well today, and I think sooner or later we'll once again see DHFL hitting fresh lifetime highs. So definitely it's a buy even at these levels.
Big move there in DHFL as well in the session today. But time now for our special segment 315. Let's get a sense of what dealing rooms are recommending in the session today. And Darshan and Yatin join in with the key buzz from the dealing rooms and their channel checks. So, gentlemen, good afternoon, both of you. Darshan, let's start off with you first. What are you gathering from your dealing room sources?
See, I think some of them are the stocks which are being discussed right now. Sun Pharma, for one, is something that's been spoken about. It's rather flat in trade, but there are two plants which are under regulatory issues. One of them is the main Halol plant. The second one is the one in which they got a Form 483 with a lot of observation, and that is their Dadra plant. So that is something that we are hearing, is the fact that they might get the EIR for the Dadra plant very, very soon. It can't be as soon, but I don't have any timelines. But the dealing rooms are indicating that probably this year the Dadra plant will be cleared. So Sun Pharma is the first stock that dealers are talking about. Edelweiss, you were speaking about it. There is a buzz of a QIP that will happen, and that also at a substantial premium. That is the buzz that's going on, and that is why Edelweiss is moving and the other counters are not moving. So we will watch out if there is a possible QIP that can happen. And finally, Eros is up almost 10%. The company in the press release has indicated that there was a lawsuit filed against, class action lawsuit filed against it in and the company and the directors in New York, and that has been dismissed in the US, and that is why this traction of 10% is seen in Eros today.
Well, Niraj, as far as my checks are concerned, Bharat Forge, that is one stock wherein dealers are indicating that there are buy flows, especially from the domestic funds. So Bharat Forge, that stock is up 4.5%. Of course, there is some business picking up in the US markets, and weak rupee also augurs well for this company. So Bharat Forge is something which is on the dealers' radar today, and also is South Indian Bank. That is one stock not quite strong in terms of price action, but the volume action is there, especially in the future and option segment. So South Indian Bank is where dealers are recommending a BTST trade. And finally, in the mid-cap space, watch out for A2Z Engineering. That is one stock wherein dealers are expecting a short-term 10 to 15% upside.
Well, that's good going. Thanks a lot for that, Yatin, as well as Darshan. Just looking at some other names in the session, Infibeam has had a bit of an uptick today. And it's not just Shoppers Stop yesterday or DMart today. A couple of others too have moved up. So Trent, for example, is doing rather well for itself in the session today, up about a couple of percentage points as well. So that's doing okay. Wonder what Shoppers Stop is up to after that big move yesterday. I haven't discussed that stock all through the show. Should bring up Shoppers Stop. A bit of a correction, a bit of a pullback coming in after that big 20% up move. A bit surprised, Navneet, though. It hit an upper circuit in the last half an hour. So it trended higher after opening up 15%. A bit of a pullback in the session.
Yeah, in fact, today in the opening session, it once again touched its fresh 52-week high. I guess it's some profit booking after that 20% gains. But for the time being, Nifty Sensex are once again in the red. But it's been a good recovery for the market. Just to tell you, this is the expiry week, and looks like the bulls are trying to defend that 9,800 mark, because if you look at the 9,800 put strike, that's added almost 13 lakh shares, and almost the premium is 15. So the support which we've been talking about, market of about 97.75 still holds. And Niraj, yesterday the low was 98.16. Nifty breached that mark today, and there was a good recovery coming about for there. And similar was the case for Bank Nifty. 24,000 has been a good support for Bank Nifty, and as we speak, Bank Nifty is in the green. Any trading strategies that you would have just before the closing that one can roll over tomorrow, since it is the expiry week?
Yeah, surely. Vedanta is something that we like among the metal space, and the way the stock has behaved. We saw a long-legged dodgy candlestick pattern on the charts yesterday, and that actually indicated that we've seen a short-term bottoming out process happening around there. Something very good yesterday happened was that it also managed to sustain above the 50-day moving average. And if you see, since the December lows, 50-day moving average has been a fortress for Vedanta. So I think it has defended that very well, and from here on it will be a good level where a trader can enter. anyway close to 325 to 330 should be your short-term target, and your stop loss should be today's low. You don't have any other option but to keep today's low as your stop loss, because stocks are moving pretty fast, pretty volatile, so you don't need you don't have to get whipsawed because of those huge moves. So close to 306, 305 should be your stop loss.
There's another one as well, Hidrin, that you have as a recommendation. So one of them, of course, is Vedanta, which we've discussed right now, but you also have a call on Petronet LNG, if I'm not wrong.
Yeah, one of those very, very strong, solid trending stocks. For the past 2.5 years, the stock has seen very little correction in terms of how the markets have behaved. Petronet, a very good thing that has happened since the December lows, it has not breached below the 21 weekly moving average, and from there on, it has bounced back pretty well. So I think anyone who's seeing for a buy at the current juncture, Petronet should be a very good entry point from here on. Anyway, close to a target of 240, 245, and your stop loss should be close to 230. So the risk reward ratio is also in favor of longs. So definitely Petronet is a good buy at this level.
Sharmila, for somebody who's wanting to okay, first Sharmila to you, then I'll ask Navneet about the FNO ban candidates. Navneet, surprisingly, I haven't spoken about them, but Sharmila, to you first. Somebody wanting to invest fresh money into the markets right now, not wanting a large cap name. The easiest thought is play safe, invest in the large caps. Are there some broader end of the spectrum names that you like? One or two names that people can invest in?
So very honestly, I don't know why you would want a large cap, because in the recent past, it's actually the mid caps that have given you a better return, and there's no reason to really think that because of this recent correction that strategy should change. So I think one of the stocks that I can recommend is DCB Bank. We are already seeing a bit of a bounce back in the bank Nifty. I think it's up about, Nifty Bank is up about 30-40 points, and the recovery has been fairly good, because that's the space that really corrected these last 2 or 3 days. And I think within the banking space, DCB Bank is a bank, I think, which had corrected, and I think around 180, 183 kind of levels you can look to buy this with a target of closer to 220. Here the numbers were good. It's a new bank, so in terms of NPAs, etc., they are on a fairly good wicket, and I think there again, I think their branch expansion is done, so that capex is out of the way, and now you will just wait for actually all the positives to come into the bottom line. So in terms of earnings, it's good. In terms of the fact that it belongs to a sector that is sort of, when you expect markets to go up, you can expect banking to be part of that rally. So even from that perspective, DCB Bank is a good bet, especially if you think that, which I think that from next week you should see a bit of a pullback in the markets once this expiry is done with. The other name is actually a more like little known name sort of. It's a stock called Mayur Uniquoters, which is in the space of synthetic leather, PVC, etc., which finds wide usage, as you know, in nowadays in terms of whether it's garments, whether it's automotive, etc. And we are seeing a growth in that segment. It is the company does enjoy 50% of the organized market share, and my belief is that once GST sort of rolls out fully, organized players like Mayur Uniquoters will get the benefit of that. So I think that's another stock that you can buy at current levels. There is a bit of an overhang on the stock because there was a large exit, so I think it's going to stay at this 360 kind of level for a bit. So it'll give you time to sort of buy the stock as well.
Navneet, no stocks coming out of FNO ban or going into FNO ban tomorrow?
Well, Niraj, there are two candidates definitely. If you look at GMR Infra, yesterday the stock just got saved by going into that ban, because as of yesterday, if you go by the NSE data, the open interest in the futures and options market as a percentage of market-wide position limit was almost 94.86. So 95% is the mark when the stock actually goes into the ban. But I was just looking at the GMR Infra September futures. There has been more unwinding than addition we've seen for the October futures. So still remains to be seen what kind of action we are seeing for this counter in the options side. Let's see if that gets entered or not. And JP Associates, I feel Niraj could enter. As of yesterday, the open interest as a percentage of MWPL was almost 93.63%. And this is the counter which has seen for its October futures a huge amount of OI build-up in today's session.
Okay, watch out. Couple of small caps, if I can call them that, at least by price, if not by market cap. I think by both. So interesting moves out there. And let's see if both JP and GMR have some actually enter into the ban or no. What else should one watch out for? Saloni Dhanuka is joining us for a quick update. Saloni, what should people watch out for tomorrow?
So Niraj, before talking about the key events lined up for tomorrow, we'll be looking out for the commentary by US Fed Chair Janet Yellen, which is scheduled tonight. It will be closely monitored following last week's hawkish outlook by the central bank. For tomorrow, we'll be looking out for a bunch of AGMs, to name a few: ONGC, GVK Power and Infra, NHPC, Tejas Networks, DEN Networks, AU Small Finance Bank, National Fertilizers, as well as MTNL. So some stock reaction could be expected there. On the economic data front, US is to release crude oil inventories data as well as a monthly report on durable goods. Now it is an indicator of production activity in the economy. And finally, we'll be keeping an eye on a slew of speeches by US Fed officials for this entire week, Niraj.
Thanks a lot for that. Hadrian, just before we start wrapping up the markets, you've given us some of your conviction bets. Anything in the last half an hour that has trended up or trended down, and maybe you can take a BTST or STBT on those?
Yeah, I think South Indian Bank is something that is looking pretty interesting. Given the kind of volatility that we have seen in the markets, it seems to be a little more stable kind of a stock that will not let traders get whipsawed due to the volatility. So. Not for a BTST, but delivery-based, South Indian Bank seems to be pretty positive from here on. You could get a target of anywhere close to 30 rupees in the next week or so, and from there on you can keep a stop loss of just a 50 pice or a 60 pice on the downside. So the risk reward also is continues to remain in favor of South Indian Bank.
Okay, that's interesting. Let's start wrapping up the markets in moments from now. So Sharmila it's a bit of a banking day today. Sharmila Joshi likes DCB Bank from an investment perspective. Hadrian likes South Indian Bank, not just from a day trading perspective, but probably from a mid-term trading perspective. And the NBFCs are on a bit of a roll today with the likes of Edelweiss and Diwan Housing. But that's not all, Navneet. I think the key highlight is that the large caps, the Nifty and the Bank Nifty, are ending the day in the green. Surprise, surprise.
That's right, Niraj. Off day's low closing coming up there for the markets after 5 straight sessions where we've seen negative closing. Though in the red, Nifty down 17 points. But remember, it recovered almost 40 to 45 points in the intraday session. These volatile moves are coming because this is the expiry week. Sensex also closing the day down by 80 points. But Bank Nifty 24,000 acted as a very huge support level. It went very close to those levels, but once again there was some buying which came up for Bank Nifty. But the broader markets actually stood out. The Nifty Mid-Cap Free Float Index ended the day with gains of almost 0.5%, and the Small Cap Index recovered today, so 1% gains coming up there. And the Nifty Small Cap 100 Free Float Index also saw a good amount of gains in today's session. Well, the advance decline ratio was also in favor of the advances today. But let's quickly take a look at a couple of gainers in terms of Sensex constituents. In terms of your top gainer, your upstream company ONGC gained almost 3.5%. Tata Steel was the other gainer. Axis Bank, Coal India, and the heavyweight ICICI Bank was ending the day in the green. And also stocks like Tata Motors, Hero Moto, Infi ended the day in the green. On the losing side, HUL, the management today indicated that the rural demand have not revived at all. So HUL down about 2.5%. Asian Paints, Dr. Reddy's, TCS, M&M, Maruti were a couple of counters which are closing in the red today, Niraj.
Well, the broader end of the spectrum was punctuated by strong gains, Navneet. So the mid-cap and the small-cap end of the market was extremely active. But look at some individual names. So Avenue Supermarts, well, not surprised at all on Goldman Sachs conviction list, and that remains, to my mind, the stock of the day along with ONGC. Now up just about 7% odd, so maybe the time of consolidation after this big 17% move that we saw. What else? I think because of the oil spike and otherwise a bunch of stocks which were active. So Deep Industries, Ceylon Exploration, Aban Offshore, all of these had a fabulous move in the session today. Aban was probably on the volume front the principal mover, but the other two also participated in the session. So good going there, both on the price and volume front for all of these oil exploration companies. Couple of other stocks that stood out. Bharat Forge hitting fresh life highs. I think it's a recommendation, a consensus recommendation from all our experts, at least both our experts, Hadrian as well as Mukesh. So watch out for that one, hitting fresh life highs in the session today. And other NBFCs included Edelweiss as well as Diwan Housing Finance, both of which had a fabulous move in the session. Adani Transmission, of course, I must just point out that one stock before I hand it over to Pradeep. I don't know whether it's as a result of the power push or otherwise, but this one the sole ranger of sorts, which has gone up post yesterday's announcements, up 5% in trade today.
A powerful stock in trade, Niraj, and if you look at the index, I think Nifty and mid-cap, we should pull up first of all the intraday trade, and there are 2 points I would like to make on Nifty as well as the mid-cap. Nifty, if you look at the kind of recovery we have seen, in first hour or 2 hours of trade, Nifty retested 9800 level or near about, more or less the yesterday's low, and 9800 has kind of turned out to be a very strong support level for Nifty. So that is one. Second, if you look at the recovery in Nifty, Nifty managed to move into the green only towards the end of today's session. But if you look at the Nifty mid-cap, ever since we actually opened positive, and most of the time, if you look at, except for a few minutes, twice or thrice we saw the mid cap slipping into red. So the leadership actually came from mid cap and small cap, and after that, I think towards the end of the session in last hour, the heavyweights really followed. If you look at some of the contributors that managed to drive Nifty up, we have Vedanta and we have ONGC, so 2 commodity stocks, and we had Axis Bank and ICICI Bank. Banking and metal, not so much of oil, but banking and metal were 2 sectors that were beaten down. So that is where the buying actually surfaced today, while HDFC was, however, an exception in this segment if you look at it. If you look at the market breadth, it remained positive through the day, and we ended very close to the day's best equation, so to say. So that again gives you a confidence that probably market has made a bottom, and we'll see a good expiry going forward. Just 2 days to go for expiry this week. And now if you look at the mid-cap, the overall heat map of index stocks, this is kind of marginally tilted towards gainers and losers. So far as the mid-cap or small cap is concerned, I think buying interest is visible. It's very clear. But when it comes to the heavyweights, the equation is not so clear, and you had so many significant losers, and you had heavyweights like HUL, Dr. Reddy's, TCS, M&M, where we saw a lot of selling. So to say, it looks like that probably there is more steam in mid-cap than large cap, and if the index moves up by 150 or 100 points from here, there could be further selling pressure at higher levels.
So that, Pradeep, quickly, final thoughts from both our experts before I let them go. Adrian, you'd go long tomorrow if the market start off flattish or marginally higher?
Yeah, definitely, because we've seen a sell-off in the past 5 days, and it's when we say buy on decline, so there are a lot of people who ask me, what is buy on decline? When are we supposed to buy? So I think this is the right time where you see, a 5-day flat in 350-400 point sell-off, and you play the bounce back. So this is the time where you can actually enter and you can actually go long.
You bullish, Sharmila, in the near term?
Well, I think the expiry is going to be interesting, because my view has been that if you see expiry closer to 10,000, then I think we can expect the October series to pan out quite well.
By Diwali?
By Diwali, you could possibly see a new high. Let's keep our fingers crossed. So I think, for me, the next 2 days are very important from that perspective. But I completely agree. I think this is the dip that has to be bought, and I've already started buying some of the stocks, same basket but at lower prices, sort of doing that SIP. So that has already begun, and let's hope that this is also one of those dips that can be bought into.
Well, thanks a lot for that, Sharmila, as well as Adrian, for joining us today on Countdown on BloombergQuint. Really appreciate. Stay tuned, viewers. We'll be back with What Did You Miss? That's coming up on the other side. Stay tuned.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
business news, where news for business people.
Hello and welcome to What Did You Miss? Let's first take a look at the top headlines at this hour. Sensex Nifty posts its longest losing streak in 3 months. Crude prices touch a 2-year high to trade near the $50 a barrel mark. The oil marketing companies face the brunt of the rising crude prices. BPCL is the top loser on the Nifty today. Hindustan Unilever is one of the top losers on Nifty after it says that rural demand is still sluggish and it's going to be a very slow road to recovery.
That is as far as the top headlines go. Let me round up the large caps today. I'm sure Pradeep will bring up the mid caps. Navneet would have some thoughts on the F&O space as well as the expiry week. But you would rejoice today's move if you're a bull, because we started off slightly lower, went down about 0.5% intraday. The Nifty intraday chart would be interesting there. We went down about 0.5% and post that bounced back and ended the day in the green. This post-closing move may show that one point downtake, but you would definitely take this very, very well. What's contributed? I think there were select financials also, which contributed as well on the upside. If you bring up the Nifty contributors list, you will see what I'm talking about. And nothing else needs to be shown on the index, but just the Nifty contributors, and you'll see what I'm talking about. Certain commodity names and certain banking names participated, combined together to take the index up higher. Vedanta, ICICI Bank, ONGC amongst the top 4 contributors on the upside, so 46 odd points. And then of course Infosys, to an extent even pharma contributed. They are not in the top 4 contributors list, but almost all pharma names had a pretty interesting day in trade today, the likes of Lupin, Sun or the others. And that negated the move that is consistently coming in from the HDFC twins. Both the HDFC stocks were down in the red today. And HUL guys, the commentary from Bajaj Corp as well, not too impressive. They maintain caution, but it's very, very interesting to note that much contrary to what everybody thought, that rural recoveries come back in a hurry, that is not happening, and which is why HUL was amongst the top losers in the session today on the large cap space.
So if you look at the mid caps, actually, it looked like as if some of these stocks that had corrected, investors or traders just came back and bought them, like Indiabulls Venture, you had Graphite India, ITI, Thomas Cook. These are the stocks that have been moving up before the market went into a correction, and these are exactly the stocks which were getting picked up in today's trade. You also had some of the names like, of course, DMart, where we saw a lot of buying interest. If you look at media space, this is one interesting sector which continues to see a lot of buying. Eros International finally ended the day at around 10% gain. That was remarkable. You also had JBM Auto moving up by around 7%, and Future Enterprise was up 6% plus in today's trade. So net, if you look at the mid cap and small cap, there were more gainers than losers through the day, and market breadth remained very strong. But what does the F&O data really suggest, Navneet? Do you think 9800 is the bottom, and we are going to hold it at least for this series now for the next 2 days?
Looks like, Pradeep, because 2 days in a row the bulls have defended the 9800 mark. Yesterday we touched low of 9816 on Nifty. Today we touched 9813, and there was buying 2 days in a row which has come from those levels. Even if you look at the options activity, after 3 to 4 trading sessions, you've seen India volatility index also cooling off. So volatility seems to be on the lower side. In terms of the expiry range, we did mention in the morning that the call writing was aggressive on the 9900 strike, and there was some sort of writing seen on the 9800 put. So if you go by that data, we are in fact expecting the range to be 9940 on the upside to about 9775 on the downside. Today as well, we did see 9900 adding about 11 lakh shares, and the 9800 strike was also pretty active, adding about 8 lakh shares. So far, Pradeep, it looks like that the expiry will happen above that 9800 mark. Remains to be seen if we can cross 9900. I expect there can be some more short covering, because there are a lot of shorts which are being built in the market.
Well, so let's wait and watch if indeed that changes or no. But this is interesting. This sets us up for a very, very interesting expiry, because until yesterday or day before, most people would have anticipated that we're going down. Pradeep Pandya in the morning, though, was of the belief that maybe we could see some bit of a pullback. So it's working out well. Let's see if that lasts or not. But what's going to happen tomorrow, amongst other things, is that ICICI Lombard is going to make its debut on the exchanges. The general insurance company will become the second private insurer to get listed, and with the issue being subscribed almost 3 times, all eyes will be on the listing price as well, and to see if it can make a good debut. Saloni is here with the different scenarios of listing for ICICI. Saloni, can it start off on a good note?
That's difficult to say actually. So it all depends on the market, of course. Talking about the IPO first, ICICI Lombard will be listing its IPO tomorrow with 5,700 crore of an issue size and at an issue price of 661. In terms of valuations and subscription numbers, IPO has been oversubscribed close to 3 times, with QIB subscribing close to 8 times and retail investors subscribing over 1 times. However, HNIs have undersubscribed the IPO. Now, Macquarie has come up with a report wherein they have cited that HNIs consider this IPO, this issue particularly, as high in valuation, and of course due to weak market condition there has been undersubscription in the HNI proportion. In terms of valuation, if the stock lists at an issue price of 661, the market cap would be around 30,000 crore rupees. However, if the stock lists at a discount of 650 rupees, the market cap would be around 29,500 crore. And if the stock lists at a premium of 680 rupees, the market cap would be around 30,800 crore. And given the market cap scenario, the price to book will vary in the range of 7.9 to 8.3 times of its book value. And in terms of valuations and financials, it is the largest private sector non-life insurer in India based on gross domestic premium income, and it has witnessed a 27% compounded annual growth for the past 3 years, while its income from investment grew at 8.5%. And finally, among the general insurers, it has the highest 1-month claim settlement ratio and also the highest reserve ratio, and it has one of the highest solvency ratio of 2.1 times among the private players as well.
Let's watch out for this. Thanks a lot for that, Saloni. The one concern I think that people would have is that the QIB book for the insurers is not getting subscribed fully. In SBI's case, I think even the retail book was devoid of major action. But, you know, I mean, the Macquarie note today, for example, wherein they went out and met a whole host of their investors, foreign investors. And I think everybody across the board mentioned that they are staying away from the expensive insurance IPOs. That's not a pleasant sign to see, simply because we are as a nation going to see, or we are as a market going to see at least 2 or 3 or 4 other large ticket IPOs to come out. Now, this definitely sets the precedent. No matter how good the quality of the company might be, if you're not pricing it right, the markets might not be terribly enthused.
So what is interesting actually is, you know, that market has been happy to play the insurance story through the stocks like Bajaj Finserv, and we saw the kind of valuation that stock has got so far. And even ICICI Pru, for that matter, you know, when the issue came, it was not really, it didn't get a good response. But later on, I think straight warmed up to that story as well. So let's see what happens to these two. But definitely the IPOs in general are getting more expensive, don't you think so? I mean, now that markets are quoting at highs and there is a lot of interest in IPOs, probably you know, the merchant bankers or the issuers are also trying to price them to perfection.
But so the counter to that, Pradeep, could be that look at what Capacite did, or look at what CDSL did. I think those IPOs were well priced, and therefore the subscription and the resultant demand. But yeah, I mean, if there is a warning sign that the managements that are going to come out with an IPO needed, I think is the response to these companies. Not poorly subscribed, but not as well subscribed as people had thought when these issues were going to come. I mean, everybody took it for granted that SBI Life would see fantabulous subscription. Somehow that hasn't happened.
And you know, I remember what people used to talk about, you know, when DMart came, that you have a market veteran coming out with an issue. So he'll definitely price it, you know, to perfection, and he'll probably put in the price that he likes and not what an investor would like. But look at what happened.
Well, that was a separate history altogether.
It's not every day you get an IPO Like
Yeah.
the DMart, look at the returns it's given. 299 was the issue price, and look at the stock today.
So I think there's some lesson in how the IPO should actually be priced.
Or
You have
maybe
to leave something at the table.
the management wanted its investors to make money. That's what
Exactly.
everyone has been saying, that the issue could have been priced on the higher side, but it was done with some sort of intention that the investors of DMart make money. But on that note, let's also listen in to the big corporate voices of the day. Harshal Mehta of DHFL speaks about the demand trends in realty, and Rajneesh Kumar of SBI speaks about the rationale behind lowering the minimum balance for saving accounts. Listen in.
Clearly, you see more awareness and more demand coming in from the low and middle income segment. And when I say low and middle income segment, I'm talking about annual income which is ranging from 8 lakh rupees to 15-17 lakh rupees on an annualized basis. And this is where you are also seeing the effect coming in, and clearly you see how the demand is being driven from Bharat and not from India.
What goes into consideration? So one is definitely the costs related to a particular product. So in this case, the product is savings backed. We incur various type of costs, which includes investment in technology, which includes issuance of debit cards, which includes costs incurred when we have to seed all the accounts with mobile number, Aadhaar number. So the operational cost for maintaining a savings bank account is fairly high. So you can recover full cost or you can recover part cost. It will be determined by what the competition is also doing in the market.
For the first year, it may be around 160-70 crores for the next 2 quarters. And later on, it would be the basic for MDF would be 400 crores plus. And then we are planning many value additions. With those value additions, it will increase further.
Okay, let's also listen in to what the management of Lupin had to say about the growth guidance in the domestic business.
If you look at the Lupin performance, domestic business over the last few years, if you look at last 4 years, the market has grown at a CAGR of 12% and Lupin has grown at 15%. So that's how we have talked about 15%. Yes, the first quarter has been exceptional, a different quarter because of the GST impact. But I'm sure coming quarters, once the destocking, whatever happened in the month of June, obviously, the stock levels will go up. And we are seeing that particular uptrend in July, August. And obviously, in this particular quarter onwards, this quarter onwards, we will be on track as far as 15% growth is concerned.
All right, that's the management of Lupin giving a 14 to 15% growth guidance. But let's now take a look at what kept the dealing rooms and the street abuzz today. Yatin Moda is joining us with all the details. Yatin, which are the stocks that the dealing room are suggesting to keep an eye on for tomorrow's session?
Afternoon, Navneet. Bharat Forge, that is one stock which was clearly under focus. Almost 4.5% up for that one. Clearly on the back of improving US sentiments and the weakness in the rupee. Both of these events help the company, and that is the reason why probably we have a lot of domestic fund interest as far as this stock is concerned, and also more importantly, the kind of pickup that we have seen in the crude prices probably augurs well for the shale gas business that they have in the US in terms of supplying important ancillary parts. Edelweiss, that is one stock wherein dealers are indicating that there could be a QIP or an institutional placement at higher levels. Of course, this is a buzz which is going on in the dealing rooms. Stock quite active, almost 10% outperforming its brokerage peers. And finally, we have Eros International. That stock was also up 10%, moved gradually in intraday trade, but dealers still expect a 10 to 15% short-term upside since we have the lawsuit in the US been dismissed as far as its parents is concerned, which had a big negative impact when the lawsuit was filed. But now, since it's dismissed, probably allays a lot of investor concerns, and probably that is the reason why we had a smart move as far as the stock is concerned for today.
Well, that's interesting. Thanks a lot for that, Yatin. So 2 or 3 names and really some key moves in each of these in the session today. Edelweiss is the interesting one. And guys, I don't know what your individual views are, but the NBFCs with the brokerage flavor, Navneet, so the MKs, Edelweiss, Motilal, we were just talking about it in the show as well. The kind of moves that they've had have been nothing short of fabulous.
Exactly. I think it's good going for them because post 2008, all these stocks were hammered and we didn't see any recovery coming about. But of late, with good market sentiment, we've seen a good buying interest also coming about. In fact, Sharmila was, suggesting it's not only the pure brokerage play, maybe.
Not at all.
Yeah, it's the other lending business, and also for some stocks, it is the valuation catch-up also playing out.
Yeah, but so for example, IIFL, I think less than 15% of its revenues are now broking.
Right.
So the overall lending business, the NBFC business, is a much larger piece for IIFL. I'm sure the similar thing is for Edelweiss, and for Motilal, yes, broking is still a bread and butter business, but I think the key contribution is now made, one by the AMC to profitability, the AMC profitability, and of course Aspire, which is the home finance business, which had a bit of a hiccup the last quarter, but otherwise seems to be doing okay. But these are just phenomenal moves that are coming into
I think an
all of
average
these names.
brokerage in India makes more money, lending to their clients by way of say margin funding or things like that, than through broking, because brokerage is now like down to nothing.
Thin margins now.
Yeah, if at all there is a margin. I mean, there's flat brokerage, which is in fashion these days, 20 rupees and something like that. Even in FNO, 20-25 bucks per contract is what they've been charging. So there is nothing much left.
But maybe these guys are probably catering to the institutional basket, wherein it won't be that flat rate, so on and so forth, because of the nature of the clients. But I take on board your points, yes. It is clearly not the brokerage business which is driving the gains for them.
So if you look at the way the stock price moved, Navneet, I beg your pardon, I think it was the P that moved faster than E, if at all, the E has moved. So now the question is whether this PE can really be sustained.
So far the markets are only chasing prices. We still have to wait and watch whether the earnings growth can actually come about or not. But so far, good going for all these companies, Edelweiss, Motilal, IIFL, MK for that matter. We've seen good gains for all these stocks on YTD basis. Moving on to the small cap stock of the day, and Nikki Merchandani joins us to tell us which is the stock that she's been tracking. Hi, Nikki.
Hi, Navneet. So Indiabulls Group stocks today as a whole, the group was up. Indiabulls Ventures in particular, this was the stock of the day in terms of the small cap space. It snapped 7-day losing streak and it ended with gains of as much as 10-odd%. The stock rose nearly 12.7% in the day, which is its highest intraday gain in nearly 7 months. That's back in Feb 8, 2017, we saw such kind of huge jump. The stock has lost 22% in nearly 7-odd trading sessions, past 7 trading sessions. However, the volumes remain pretty much low at 1.2 times its 30-day average volumes on NSE. Well, the total year-to-date return for this counter is as much as 1100%, and the provider of a security broking and advisory services has a market capitalization of nearly 10,770 odd crore.
Thanks a lot for that, Nikki. Well, dynamic fuel pricing will hurt the macros much more than individual players. That's the word coming in from the Managing Director and CEO of Envision Capital, Shah. In a chat with us earlier, he further states that rising crude prices, aviation stocks might not be a good bet. However, he's bullish on the players in the IT space. Here's a slice of that conversation that he had with us.
We're bullish on that space. I think we're bullish on that space, and some of these companies which you alluded to have basically been focusing on the relatively new age opportunities. Opportunities like IoT, opportunities like SMAC, artificial intelligence, all of that put together. And what it looks like is that these kind of companies have invested in these opportunities. When I say invested, it's not about making some big bang capex, but basically taking a hit on their margins. So that basically they build up a critical mass, create this as a $100, $200, $300 million revenue pie, and then you're ready to accelerate once you've upped the learning curve. And I think that's what some of these companies have been doing, and I believe that that's the right thing for them to do. And the valuations right now, I think, make them really attractive.
Well, what market is really worried about right now is, rising crude prices. Do you think from $40 to $50, the range we saw for many quarters now, if we really move closer to 60, which is the current price, would that alter the earning expectation for several sectors meaningfully?
Oh, it would. I think the bigger damage that it would create would be twofold. One is it would definitely have inflationary pressures. There's really no doubt about it, and especially now given that that price hike can kind of be passed on a daily basis. That's the new pricing environment. Okay, that's the right thing to do. So that's one. So it could create inflationary pressures, and two is it could kind of in a way restrict the fiscal space which the government has. Which in turn could constrain any kind of a stimulus that it could be contemplating. So clearly believe that it will hurt the macros more rather than individual companies. Yes, there would be those one-off paint companies, etc., which would basically get impacted, or a lubricant company which could get impacted. But I see a bigger impact on the macros versus the micros.
That's interesting. By the way, speaking of crude, today's session, Aban offshore is up about 9% in trade. So some of these volatile stocks get clubbed out there. Just an ancillary out there, Nilesh, aviation and getting clobbered the last 2 or 3 sessions. I think the expectation is that the ATF prices revision, which will happen, will be substantially higher. So all of these stocks are seeing a bit of a downtick. Any thoughts on that pocket? It's a micro pocket, but nevertheless.
Yeah, I mean, I still think one would want to revisit the age-old tenet that airlines don't create wealth. Okay, so that's an age-old tenet. You could kind of give various arguments to spin it the other way and all of that, but net it's a play on crude oil. Okay, if crude oil falls, that's the place to be in. If crude oil rises, that's the place to exit. That is it. I don't think the operating matrices have changed dramatically. Okay, because there's no real USP of any individual player. The ability of the other player to basically just catch on to any of the virtue which the other airline is creating, I think is very immediate. So you could say one airline is operating on negative working capital, but yes, everybody else is operating on negative working capital. Somebody really says dynamic pricing. Within a week, the other airline just kind of adopts dynamic pricing. So I think the bigger challenge for them is that I still think India is a price sensitive market. Let's not compare ourselves with US or China, which are got multiple times our per capita GDP. So you have pressure on pricing, and the ability to hike prices, okay, which means fair realization, even when you're operating on very high occupancy or very high load factor, I still think is very restricted. So I'd say that if crude is kind of on its way up, this is not the place to be in.
Well, moving on, what are the key events and important cues to watch out for tomorrow? Saloni Dhanuka joins in with the details. Saloni.
Before talking about the key events lined up for tomorrow, we will be keeping an eye on the US Federal Reserve, Janet Yellen commentary tonight. It will be closely monitored following last week's hawkish outlook by the central bank. For tomorrow, we'll be looking out for a bunch of annual general meetings, to name a few: ONGC, GVK Power and Infra, Tejas Networks, NHPC, AU Small Finance Bank, as well as MTNL. Some stock reaction could be expected there. On the global front, US is to release crude oil inventories data as well as monthly report on durable goods order. Now it is an indicator of production activity in the economy. And finally, we'll be keeping an eye on the slew of speeches by US Fed officials for this entire week.
Thanks, Saloni, for getting in all those details. Well, if you go by today's trading session, the upstream companies were actually in focus, from the likes of ONGC, which was one of the top gainers today on Nifty. You also had stocks like Oil India that saw a significant amount of gains on back of Brent crude oil prices inching to that mark of $59 per barrel. But because of that, you also had the oil marketing companies which actually fell today. So the likes of HPCL, BPCL were down and about. So clearly, you had a couple of pockets which did well, but the oil marketing companies were down and about. Since we're talking about the crude oil prices, let's also get you a check on the commodities market. And joining us now is Jayesh Kilani with the same. Hi, Jayesh.
Good afternoon, Navneet. So let me start off with the oil prices, as you were mentioning. So we have seen a 2-year high for Brent oil prices and a 5-month high for WTI. Now the spread between the two has reached a multi-year high. So it will be very interesting to see how WTI plays catch up or Brent corrects. So either of the action should happen on that front. Also, an interesting chart pattern formation on Brent oil. We have seen a golden cross formation wherein the 50-day moving average has crossed above the 200-day moving average. But moving on to the gold prices, Now, we have seen some bit of softness coming in for gold. Primarily two reasons for that. One is there has been a strength in dollar index. Last time I checked was trading about 90 to 80 odd levels. And secondly, the North Korean tensions, those have kind of eased off. Also moving on to the base metal space, we have seen zinc prices gain more than 2% on the Shanghai Futures Exchange. And also the backwardation has been at a decade high for zinc. The similar action can be seen on the LME, where zinc prices are trading with a shade of green, up about 1% odd. The other space that did really well was the Shanghai steel space, or Shanghai rebar, which actually snapped its 4-day losing streak and ended the day with a gain of 1%. Morgan Stanley has come out with a note wherein they have upgraded prices on most of these base metals on the basis of their Q4 outlook. So they have upped the target prices for aluminium, copper, nickel and zinc.
Okay, thanks a lot for that, Jayesh. So that's the Morgan Stanley view on commodities and the broad commodity picture as well currently. But with that, I think it's a wrap on this edition of What Did You Miss? News and updates coming up on the other side. Stay tuned to BloombergQuint from Pradeep, Navneet and me. Thanks so much for watching this show.